Good morning, everyone. Welcome back to Stock Market Brief. This is where we do our weekly analysis on the overall market and on the sentiment of the market, as well as what's the likely scenario where price might be heading into later next week. And we'll be looking at a couple of data as well and see what we can find out. And we'll be looking at supporters and levels as well for the 7 mega cap tech stocks: Meta, Tesla, Amazon, Google, Microsoft, Apple, and Nvidia, to give us more clues to see where the cues might be heading overall in the markets. All right, before we get into the charts, let's get started with the data first. So right now, fear and greed index, we went from greed to neutral. So at 51, I would say probably gives nobody really an edge here. But if the market starts to tank a lot more and we start heading into the extreme fear part, then that may probably be a time where you can, start to add for a potential swing trade on the upside. And in terms of AI system data, I talked about this last week. We get this data every Wednesday. And I said that if we shift from 41 close to the 50s or even high 40s, pretty much 50 here, that there may be a chance where we may drop in the market because everyone is shifting to one side of the boat, right? If all of a sudden everyone, became bullish because of the results of the elections, then there may be too many people on one side of the boat, so that we have to shift things a little bit there. So this is what we're seeing here. So after the drop this week, let's see if things even out a little bit next week. And most important for me next week is Nvidia's earnings, pretty much on Wednesday after close. Than that, the rest isn't as important for me unless you're in one of these stocks. But overall, Nvidia is going to move the market for sure, because we know it's a 3.3 right now, or $3.5 trillion market cap, as well as it's going to move the entire semiconductor sector. So yeah, so it's going to move the market quite a bit depending on which way it decides to go. So be watch on that. And if for example, if market sentiment is not well Monday and Tuesday, right, and going into Nvidia and it doesn't report well, then that's pretty bad for the market. Or vice versa, right? Market sentiment is good. Friday was maybe like a price in of de-risking for essentially. I wouldn't even say it's de-risking. Nobody really. I guess you could de-risk a little bit, right? Nvidia was down 3% into its earnings, and then all of a sudden it reports really good earnings, right? Then we can shift things pretty quickly here. So big quick eye on watch for Nvidia on Wednesday. Here's the data. Not much, nothing on Monday, and Tuesday not that much either. Just have some housing and GDP numbers. Wednesday really not that much either. Thursday is the one that I'll be watching. Jobless claims, right? Job numbers are very important now, especially in the economy, as well as manufacturing numbers. So Thursday and Friday is more data driven for me. Not much data this week. All right, let's look at the charts. So last week we talked about a bear break here on this rising wedge and zero follow through, because you can see zero follow through just means that the initial break, right? Thursday was the initial break, and you can see after that, not a single day went below it. So that's what we call locking follow through. And then we got that result. Next thing you know, we head all the way up and pretty much bull break. And then next thing you know, nobody's buying after that pump overnight. Pretty much it was like an overnight pump there was intraday pump a little bit as well. But then you see kind of like zero buying over here. It kind of just slowly trickles over, and we were thinking about maybe it could be a bull flag. And next thing you know, right, we just rolled over on Friday. And now we're back below. You could even just go like this. And that was pretty much where we marked the lows. I don't trade off these trend lines, but it's more of a visual guide for overall the bigger picture. This one. So yeah. So let's see if it's if this gets followed from the bears, because this is just one day of a drop. And technically we are still in a uptrend on all the major time frames, right? The weekly is still an uptrend. The daily right now is still an uptrend, right? Because this move was so big, this is right. We haven't even broken the pivot yet, so it's still a daily uptrend at this moment. Although I wouldn't call. Actually, I take that back, because we lost the daily uptrend on right here, right? This was a daily uptrend. This kind of broke the pivot, and this just came up. So we're I was just saying we're neutral trend at this moment on the daily. But as long as if the bears can't crack this pivot low, this demand zone, then it didn't really create any structural damage at this moment. So let's see if bears are serious about this. So this is the first day they took it down, and let's see if they continue. But the weekly trend is still intact. Weekly, monthly, all the longer term time frame is still in an uptrend, because weekly is very important for me, especially on the market overall. We have not had formed a weekly downtrend ever since all the way back to this. I can't even remember the last time we even had one. April, there's a mini weekly downtrend right here where we have this big candle right here on this April, right? So even this drop, right? You can see this was where the bears had their chance to come from the weekly downtrend because of the size of this drop, right? Even with a significant bounce, they had their chance to potentially break this pivot to come from the weekly downtrend to make that lower low. They didn't. Hence, this lower high was set, and now bulls took it back, had that weekly uptrend confirm. You can see that ever since that, it's just been keep on going up. So weekly trends are very important. So as long as weekly trends are intact, bulls are fine. So very first step for bears here, if you're a bear here, crack this pivot low, make more room on this drop, forms a lower high and then lower low for a daily downtrend to confirm. Once we confirm a daily downtrend, then we zoom out to the weekly to see if bears can confirm weekly downtrends. If we do confirm weekly downtrends, it's likely this is going to be the temporary top for now, but that's still weeks away. I would say at least 4 weeks away if that does even happen. So let's just see if the bears can even confirm the first daily downtrend. Um, they did here. I mean, right? That's the daily downtrend here. There's another daily downtrend here, right? So and we haven't really had one. This is a tiny one here that was like zero follow through. I wouldn't count that. It's too tight. So we haven't had one since August. So let's see if bears can confirm a daily downtrend here. And if it does start shaping up, right, then we will be cautious, right? But even over here, I'm pretty cautious at this moment. So this could be a tightening range as well, right? It could go like this and then tightens up. But Nvidia's earnings is going to probably dictate the direction, so we'll see. My guess is that Monday and Tuesday might see a relief bounce or something a little bit, and then Wednesday after hours will really dictate the direction of the market, because the semiconductor sector has been really weak. Even on this bounce, right? It's already given back all of its bounce if you just look at SMH, the semiconductor sector overall. So Nvidia really better do well, otherwise that semiconductor sector is gonna be dragging the market down. All right, so let's take a look at the rest of the semi-cap techs to see what they can give us. And so Meta finally broke its support that we drew together for months. This little box where, this is a little structure to build along the way, right? The idea is just supply demand. It's very simple. We don't want to make things more complicated, right? Supply and demand trends, right? This was the last really demand zone. It kind of built up support along the way. So when it came back down, obviously it's gonna act as support. And this is the first time we kind of broke below it. You can see very clear resistance up here, right? Even everybody can see that 600 resistance, psychological resistance, as well as a quadruple top. We talked about this. Can't get over it, right? It's not really gonna go anywhere. So yeah, so once we start cracking through here, making another leg down, I'm looking back closer to this 540 zone, where it was prior resistance. So this, we'll see if it bounces from here. So first level for bears to get to 540. If you guys can crack through that, we're looking down to 530 zone for me. We do have a slightly kind of like a trend line support, like this, bounce, 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 bounce. So we'll see if it ends up holding here, at least initially, right? Like even if they want to crack through this trend line, let's see if they need to get a shallow bounce, right? Like a bear flag. This could be a daily bear flag, shallow bounce, and then they crack through it. So we'll see how it ends up playing out overall on Meta. All right, let's see. Tesla. We did have, I mean, one, two, still quite a bit of pullback, but right, it's a 14% pullback. But given the size of the move, we were up 67%. So 14% pullback on a 67% move on the upside isn't that big of a red flag, but yeah, so it could still be a bull flag on the weekly. Um, so as long as we hold right around these area, should be okay. And we hold this daily EMA 12, and let's see, potentially go sideways, something like this. That would be the best case scenario for bulls, because right after a 67% move and you go sideways, consolidation at the top of the range, that's the best case potentially for another move up. So let's see if it can do that. And even better if it forms like a tiny range, then we know whichever way it breaks, either bear or bull, then we can position for that. For example, it breaks bear, you're in from a long down here, right? Then you can stop out. And if it breaks bull, then you just raise your stop loss here and then let it keep on playing out. So that'd be the best case for bulls if it consolidates back up here. For you bears, continue to stair step down, meaning every candle is currently lower. All the highs have not broken above the prior high, so just keep on going like that. And let's see if it continues. Right, maybe for bears, you want to crack through this daily EMA 12, this tail looking line for sure. It acted as support down here for once, so it's not like it touches this line and needs to bounce, right? It's a visual guide where it shows you momentum, how strong the momentum is, right? If you start cracking through here and coming back down to this 284 zone, and then back to 272, then that's starting to shape a rough flag for me. Pretty much giving back pretty much off this pump. So, but for now, it's still okay. But if it starts to crack through these 300 zones, psychological zones, and 284s, starting to fill this gap, that's a huge red flag overall. Amazon making new all-time highs. So although we had a huge drop on Friday, the chart itself currently has no red flags. And yeah, so red flag for me would be something like, we come up, weak bounce, and make a lower low. That'll be a daily downtrend confirm. And we got to break through this trend line too as well, kind of like this green one. Bounce, 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 right? Bounce here 5 times. So if the bulls can't consolidate around here, maybe from like a tiny range and then head higher again, then and the bears decide to get a weak bounce and break through this trend line, confirming a daily downtrend as well, then that's the red flag for me. But for now, no red, especially Amazon right now has no red flags at this given moment on the chart. I pretty much just hit all-time high like 2 days ago, and then one big drop on the day because the whole market rolled over. So not that big of a deal at this moment. And you can see that we prior high, prior all-time high, resistance, 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 now acting as support. Right, we literally stopped right there, and it bounced a little bit into the end of the day. Doesn't mean that just because we bounce here, we're going to come all the way back here again, but it's showing that there is some buyers here that is defending this prior all-time high support. So that's why I said it would be a red flag if we get that something like this cracking through those levels. For now, 0 red flags. And Google is okay. Like, it's not like end of the world here or anything, but you can see we just can't get over this 181 zone. Very, very clear, which is the prior all-time high structure acting as resistance. And in this case, we're probably going to form something like more of a tiny range. My guess is we might come back to test this 168, just to back test it, which we already kind of did from this earnings drop, bounced. Maybe if we back test it again, something like that, from some kind of a tiny range in a smaller range, as well as here from kind of a tiny range as well in a bigger range. So overall, Google is I would say more of a lead bear, but compared to the rest of its peers, the chart is still okay. But overall, probably more of a tiny sideways range here for me. No fireworks at this moment. So Microsoft here kind of broke out of its tiny range up and down and does nothing. So it's more of a channel for me now. Very clear channel, right? Resistant double top here. Still in the middle of the channel. So as long as it trades in the channel, right, nobody really has an edge in here, right? It's either going to come down to 400 psychological support, or it's come up to if 438. This is pretty much where it's going to trade. So currently, I would say no edge on Microsoft, but it's no red flags either because it's just consolidating sideways. If it starts, cracking through 400, and breaks through these levels, right, then it's a very clear red flag, and market probably rolling over by that time. And if it start coming up to 431, 436, and break above that and test this structure, then market's probably heading to new all-time highs at that time. So yeah, I mean, it's not like Microsoft trades within here. We know where Microsoft's going to trade. So Microsoft is neutral for us. Not really helping the market, not really tanking the market at the moment. And Apple, similar idea. It's going to trade in this ascending triangle for now. And if we start, go like this, and then we roll over like that with a big candle, then that would be the red flag for me. But we still got to crack through 214 to break these pivots when that does break, right? Let's say it breaks like this, and one big red candle, and then it just bounces. Then kind of like what the market did, that rising wedge, then that's just no follow through. There's nothing. It's no red flags there. But for now, right, very clear resistance here at 236 and 231. So these two levels are resistance for me, and support is just pretty much this support. I can move my line a little bit, but anyways, this is more like a visual guide overall. Support something like that. And as long as it keeps going like that, grinding around this area, we know where it is. So Apple is neutral for me as well at this moment, although it's trading near all-time highs, so no red flags at all. And let's take a look at Nvidia. So Nvidia is pretty much the one I'm going to be more concerned about because of its earnings. Still no red flags, right? It tried to form bull flag here, like the market, right? SPY was trying to form bull flag as well when it had that big move and flagged, and it didn't. So it broke bear with the whole market on Friday, and we're just kind of testing this trend line. Bounce, 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 right? So no red flags either for me until it kind of cracked through that. Yeah, 4 bounces so far. So if this cracks through here, maybe head and shoulders, right? Something like that. And then we roll over back to, this is going to be the first support I'm looking at, the 230 zone right here, the structure, where we bounced a couple times. So even if we crack through that head and shoulders, 130 would be where I want to see some support. If it doesn't, then we just roll through it. Then we're looking back down closer to the 122s. Other scenario for the bulls, right? It holds sideways into its earnings, and then it has good earnings. Next thing we know, we are back to all-time highs. And resistance would be 150 for me. That it needs to crack through. If it reports really good earnings, I'm sure 150 is probably easy to crack through. But it needs to exceed its kind of like expectation because of how extended and how large the market cap is now versus back then, right? So in my opinion, I would say they probably need to exceed the earnings in quite a bit of ways for that to just get one of those big 10% moves again. But overall, we'll see what happens. For now, the chart, technical wise, Nvidia is fine. Still in an uptrend on a daily, and is still intact in trend line. So we'll see how it goes. All right, that's all for you guys. Feel free to comment, like, and share if you guys made it this far. And if you guys are looking for one-on-ones for more technical analysis, if you guys learn anything, feel free to go to the YouTube link as well as the Patreon link as well on YouTube. And I'll see you guys tomorrow for commodities update. Have a great rest of you guys' weekend.